Fed meeting week tomorrow. So it's pretty much already priced in. We're gonna see an unchanged rate. So the current rate of inflation is 4.25 to 4.5%, and it's pretty much priced in 99% surety that those rates are going to be unchanged. So why is it such a big deal? It's largely down to what happens in the Fed's dot plot. 99% for tomorrow for the FOMC meeting is priced in that it's going to be unchanged. The current rate is already this. As you get further along, so to the next Fed meeting, you can see over here, you can see May's meeting, there is an 80% chance currently. So we're basically waiting to see if it shifts more down the curve of lower interest rates. And that's going to be all in the rhetoric, and it's going to be in his meeting, in the FOMC press conference, which you can expect to happen just after the rate decision. So big things will happen. So why are lower interest rates priced in? Well, there's fears of slower economic growth, rising risk of recession. There's an increase. There's a 36% increase from 23% in January that there will be a recession this year due to GDP not growing. Whenever you talk about tariffs, like with Donald Trump, when you talk about things like, the inflation rate being sticky, going up, then, you're going to be looking at potential recession fears, which are not good for markets. And it's largely why the gold price has been doing so well. I mean, gold is at an all-time high. Bitcoin could follow. US inflation data recently printed 2.8%, and it was estimated 2.9%, so it was a beat. But the real inflation rate currently is low. The true inflation rate, true inflation tracks the real rate, currently at about 1.65%. So the inflation rate is still modest. So what happens in tomorrow's rate cut? We don't know that yet, but it's going to be all about the rhetoric. So tune in at 2 p.m. To get that data. I also recommend, guys, to check out Blowfin, great crypto trading platform. And the reason I suggest check out Blowfin is because there's currently a choose your own welcome bonus. Normally it's like $30,000 bonus like with WeX here, and you can get those bonuses, but they're really hard. You need to deposit a lot of money. Choose between $25 and $1,000 on Blowfin, and if you click on that link, it will tell you what you need to do to get those bonuses. Bitcoin. This basically shows us Bitcoin long-term hodler net position. So these are long-term Bitcoin hodlers, and it also rules out anyone that's holding less than one Bitcoin. So these aren't quite whales, but these are serious Bitcoin holders. And what we can see is it has been increasing from the kind of late February. We've been increasing that, and typically when it's in the red, the Bitcoin price falls, and it's a lagging effect. So you can see the Bitcoin price has been hovering as low as 75,000. You can see generally there's a trend reversal here in terms of the bigger holders and those that have been holding for a long time. What else is very interesting for Bitcoin is what's been going on with the spot ETF inflows. We've seen a lot of bearish activity all throughout March. And for the first time in March, we just saw a net inflow of $250 million in Bitcoin ETFs, which was yesterday. So is this a trend reversal now from institutions, from the big money? Could be a good opportunity to open along with Bitcoin if you agree with the whales, basically. It shows us creating these bull flags, and you can see that, $84 we recently tagged, and the next major target takes us to a new all-time high of $117,000. But before we get to that kind of level, we might see some further pain. And it's important to note that on the weekly chart here for Bitcoin, we're still respecting this level, this curved support line that's been in action since the bear market bottom November 2022. We have touch points, all going through the bottom there. And the danger right now is we break that level. If we break this major level, certainly we will, at least in my opinion, tag sort of $69,000, $70,000. So you can even have a sell-off up to 35% and be in a bull market. Currently, Bitcoin has done 30%, could go 35%. That would be slightly worrying. I mean, if we lost 69,000, You do have another major level of support, which takes us to 54,000, but you're starting to come down on the support levels and it gets worrying. People start closing their long trades. You've got to be careful. At the moment, the support level is this $82,000 and the resistance, you can't sit on this higher time frame chart, kind of $84,000 level. So we're in a very tight range between 82 and 84,000. And I don't really see that changing until tomorrow's FOMC. We know CPI, the inflation rate, the price index has been cooling. And if it does cool, it does allow us to more comfortably decrease rates. So the 𝗕𝗬𝗕𝗫, this is the dollar strength index, is very favorable to risk assets right now, or at least should be. We've seen the dollar lose a lot of strength since the start of the year. The dollar's down 6%. When you have a weakening dollar, it's very good for risk assets. Gold's been loving it. As you can see, we have a major breakout on the higher time frame, and gold to me still looks like it's heading towards that $4,000 level. And ultimately, that is a sign of a weakening economy, potential recession, geopolitical tension, fear, which kind of isn't great for Bitcoin, it has to be said. But we have an interesting situation of the dollar potentially breaking to the downside. If this dollar does break eventually to the downside below 101, then you really have to start looking at some risk assets. The S&P 500 is still uptrending, but it has seen a sell-off since the start of the year. And this is really why Bitcoin has fallen. You can see the S&P's fallen 10%. What that meant for Bitcoin is it's fallen 3 times that, because there's about 3 times greater correlation of Bitcoin to the S&P 500. So if we see the S&P fall any more, could, being the operative word, another 30% downside to Bitcoin, which does take you to that $54,000-$55,000 level. I wouldn't be surprised to reach $54,000-$55,000. It wouldn't mean that the bull market's over, but it would shake up the market in a massive, massive way. So be prepared for all scenarios.